Have you ever wondered how you should scale your real estate investment team? Maybe you have transitioned from individual or investing in individual, say, single family residences, maybe a small multifamily property, or done one or two passive deals, and now you're looking to go bigger. What is the order that you need to add various team members, and who are those team members? We're going to answer that today in our talk on how to build your freedom team, the 5 experts that every investor needs. Now, we do this masterclass live every Tuesday to help you turn your active income and savings into passive income and long-term wealth. So maybe you've tried invest passively before and just couldn't get comfortable making the leap, or you actually invested in a deal before and realized, ooh, that deal wasn't the right fit for me and my goals. Or you are a seasoned investor and you simply want to sharpen your skills. If that's you, you're in the right place. My name is Whitney Elkins-Hutten. I'm the Director of Investor Education here at PassiveInvesting.com, and I've been investing in real estate since 2002, be it in active real estate holdings, passive real estate holdings. I've documented my journey in my book, Money for Tomorrow, How to Build and Protect Generational Wealth. But I'll tell you this, the reason why I invest largely in passive real estate investments is so I can get time and choice freedom and spend it here with my crazy crew as you see them on the screen. And I want to help you do that too. And again, if you want to learn more about my journey, you can check out my book, published with Bigger Pockets. You can also find it on Amazon. But again, everything that I've done is in service of one goal. How do I get 100% control and choice on how I spend my time? And I have found passive investing to be that way to get control and choice on how I spend my time. Now, I may have done some active investing along the way, but regardless, we can help you achieve this goal here at PassiveInvesting.com, whether it's through our equity investments or our real estate debt fund investments. So be sure to check out PassiveInvestingWithWhitney.com. There you can get on a one-on-one call with me. We can discuss your investment goals. You get access to our vetted opportunities and, of course, more comprehensive educational resources like you're on today. So we are going to talk a little bit about legal and tax, but more from the perspective of like who should be on your team. But as always, these videos are for educational purposes only, so make sure you take anything that we say here back to your investment team prior to making any investment decisions. All right, so I wanted to highlight something today is this journey that a lot of investors go through. Maybe you're thinking back, from several years ago when you made your first investment. Maybe it was in the stock market, stocks, bonds, and mutual fund. Okay. And then you transitioned into like maybe buying your first rental property, first multifamily property, or maybe you just skipped that part altogether and went right into your first passive deal. There was a little bit of uncertainty, right? You had to build skills. You had to learn what is passive investing. What are the different skills that I need to have in place? Well, what is that network that I need to have in place in order to do this well? And as you started putting together these various, skills and networks in place, that build more confidence. Same thing when it comes to passive investing. However, I find that a lot of investors, when they come to the space, they choose to continue to go at it alone, especially if they came from owning their own single family rental properties. But here's the thing, you choosing to do it on your own or going online to find all the free advice out there, or maybe just not even taking any advice, will cost you more than any single investment mistake. So staying in this, part of the journey where maybe you're a DIYer, you're a lone wolf, you don't want to build a team, you can do it better, may continue to lead you into like second guessing your investment decisions, making avoidable mistakes. Maybe you just even stall out on your portfolio growth, or you're just so overwhelmed by the complexity of all the taxes and the legal decisions that need to be made. But I can tell when I'm talking to a very seasoned investor. Okay, one, they've got a lot of confidence, and part of that confidence comes from is they have a team behind them. They have a clear decision-making framework. They themselves have developed that framework, and we'll talk about what that is in a second. They know they have a team in place behind them that if they have a tax or a legal question, they're going to take that question to them and allow the pros to answer it. And while this might seem like an upfront cost, it actually allows them to scale their portfolio more effectively and efficiently, right? Which gives them peace of mind to focus on what matters most. Again, going back to that result that we all are trying to get to, which is how do we have more time, choice, and freedom? Okay, so now that we understand this journey from uncertainty to confidence, especially in the context of passive investing, I want you to think for a second, where are you on this journey? Are you more towards the lone wolf, meaning that you're trying to do things DIY, trying to keep your costs so insanely low that you might be tripping over $1 to pick up a dime? Or are you closer to building that team, that optimized team that's going to help you make all the right investment decisions with confidence? Okay, it doesn't mean that there will never be an investment challenge, but you have a team, a sounding board in place to be able to navigate every situation. All right, so think about where you are on this journey because I want to start building this out. You know, who are those team members, and at what phase of your investing should you add these team members? And I want to break this down into like your foundational phase, okay, then your deal execution phase, and then your advanced optimization phase. So when it comes to our foundational phase, be it actively or passively investing, there's really two professionals that we should seek out pretty immediately. One is the financial expert. And for those of you who know me, I think you should be one of your own financial experts. It's not to say that you shouldn't have, a fiduciary or an advisor as well. But I think if you're just starting off, you can be your own financial expert. Why is that? Because nobody is going to look after your money like you do. So we want to put you in that power position. All right. So what should you be doing as a financial expert? Okay. What are the kind of the major role that you should be playing here? Well, number one, clarifying your goals, understanding what it is you're driving towards. All right. And not borrowing other people's goals, but really thinking for yourself, what is your goal? What do you need your portfolio to do for you? Okay. Both today, in 5 years, 10 years, 15 years, 20 years, 30 years down the line. Okay. We're going to have different inflection points. And then your risk tolerance. How much risk are you willing to take? And what is your risk capacity? Okay. So risk tolerance and risk capacity are two different things. I want you to think into that. All right, understanding your timeline for investing. Okay, so how much time do you have, for time to do the heavy lifting in your portfolio? If you don't have much time, then maybe you're going to have to take on a little bit more risk to achieve your result. All right, we want to make sure those three things are actually well aligned. And then we're going to come up with a capital plan. Okay. And I would highly encourage you to make sure that you have thought through your goals, your risks, tolerance, and capacity, and your timeline before even talking to a financial advisor, because your financial advisor is going to look at your capital plan and they're going to put you in a bucket and start allocating funds, right? So take a heavy role in this. Because without a plan, you're going to miss the big picture. Things are going to be distracting. It's going to be shiny objects all over the place. You're going to start chasing tactics rather than fundamental strategies when it comes to investing. Now, in my coaching that I do one-on-one with investors, just one core example, taking one of my investors back to understanding, putting them in the power position as a financial expert themselves. Okay, so they can pair well with their financial fiduciary. It led them to putting together a plan where they're going to be able to double actually their investment income, because now they're going to start trimming away all those deals that they were chasing, because now they know that they are completely 100% aligned with their plan. Now, in this particular example, it was somebody who was investing actively as well as passively, and they were confusing what they were doing actively with how they wanted to operate passively. So again, that means that we might have to have two investment strategies here. That's why it's so powerfully important that you are your own financial expert. Okay, when do we add in that additional fiduciary? Well, for me, I would add in that additional fiduciary if you're going to outsource the actual capital allocation. So, once you've thought through your goals, your risks, your timeline, your initial high level capital plan, okay, now if you're not going to be the one that's going to research opportunities, okay, if you're not going to learn how to vet operators, markets, and deals, really stay in tune with how your capital allocation is shifting through various markets, that's a great opportunity for you to do some research and bring in an additional financial expert. Okay, somebody that can help you achieve your long-term goals. Now, the other person that you need at this foundational level is the tax strategist. Okay, because everybody's situation is so different. And when we're investing in active real estate or passive real estate, one of the most powerful, wealth building strategies in real estate is how we lever depreciation. Okay, and we want to get that right from the beginning. Now, I know when I was starting off, I like just devoured the interwebs and learned everything about depreciation myself. However, it was only whenever I started bringing, in a tax strategist, not just a regular CPA, a tax strategist. That's when I was able to kind of blow the doors off my growth because I understood how to eliminate my tax drag, how to utilize depreciation to keep my income tax free, and then how to coordinate all these different tax strategies that are in place. Okay, now tax strategies are different than tax credits like bonus depreciation, but we want to learn how to lever both. Okay, now the tax strategist is going to look at what you do for your day job. Okay, and maybe if you have a spouse, or a spousal equivalent. They're going to look at what your spouse does and they're going to help you coordinate the entire portfolio in combination with your goals, risk, and timeline that you already outlined, but also what you're doing currently, what your spouse is doing currently, and come up with a plan. Okay? Because what you keep matters a little bit more, I think, than how much you make. Now, I put in, same thing in my book right now. I've seen a lot of investors let the tax tail wag the dog. However, we want to make sure that have a plan in place to safely and efficiently utilize the tax benefits when it comes to investing. And, a simple tax strategy structure can shave tens of thousands of dollars off your tax bill. Now, for a lot of my high earning income earners, saving $48,000 might not be that big of a deal, but that's $48,000 that you can now add back into your portfolio to compound invest for the long term, right? That will give you more cash flow, more growth, more tax benefits. All right. So again, when do we start adding in the tax strategist? Okay. Again, I think from the very beginning, but I want to give you some guidelines here. I don't think we need somebody that we have to keep on retainer monthly for this. If you're just starting off, a CPA who also does tax strategy by the hour is a great way to get started because spending $300 to $600 a year for a tax strategy session is well worth it. I've seen CPAs offer up, $12,000, $20,000, $25,000 tax strategy packages. That might make sense as you scale and grow, but we want to make sure that we're again scaling our team as we scale our investment portfolio. Now, we should always engage our tax strategist if we can the year before we're going to create that taxable event. Okay, so what do I mean by that? We're recording this in August of 2025. So between now and the end of the year, I encourage everybody to find a tax strategist, have a conversation with them. What can I do last minute wise to save on taxes in 2025? But more importantly, what's my plan moving forward in 2026? Okay. Now, what we tend to have happen is that first part of the conversation, people are scrambling to meet with their tax strategist in December and going, what can I do this year to save money? There's not much. Or they actually wait until January of the year that just closed and they go, hey, can I lower my tax bill from last year? Unfortunately, there's not many maneuvers that you can do. So that's our foundation. Okay, this is a question I'm asked so often by investors. Okay, now after that, okay, we get into the deal execution stage. One, so we thought through our own personal financial situation. What do we want? If we are not going to execute our own strategy, maybe we bring in that fiduciary advisor. Two, we're going to bring in the tax strategist to help us keep more of what we make. Okay. Again, not just about somebody who's doing the accounting, but somebody who's actually helping us reduce our tax liability. Now we're getting into execution. Now, there's three people here that I really want you to take a look at adding to your team. And not necessarily in any one particular order, but I personally would add them in an order of the operator or sponsor, the legal expert, and then the retirement account expert. But you may choose to reverse some in this order. But let's go through each one of their roles and responsibilities and when do we add them. So the operator sponsor, here's the thing. If you're an active investor, guess who's the operator? You are. If you are a passive investor, you want to make sure you're engaging with the operator and sponsor. Okay, that person's roles to find the deal, acquire the deal, manage the deal that you invest in. Okay, they need to have that expertise in that particular area in order to create a return and guard capital. Now, we do so much education here at passiveinvesting.com to help people understand how to find and vet quality operators. Okay, I encourage you to review those boot camps that we do. But when do we add this operator to the team? When we're ready to place capital for your first or next investment. Okay, we want to make sure that we're doing either our own personal development if we're going to be the operator, making sure we're 100% ready, or we want to learn how to vet that operator and sponsor. Okay, do that thoroughly before writing the check. Okay, the next piece is the legal expert. Now, I add them second because we actually oftentimes have to have a deal that we're looking at before the lawyer or the legal expert can help us out with the deal, right? We can hypothesize all we want, but if we actually show them a deal, then they can go, oh, okay, this is how we're going to title it. This is how, it's going to fit in with the rest of your portfolio. They're going to take a look at the legal documentation and be like, okay, great. Here are some things that we might want to consider as risk and red flags. How are we going to mitigate those? But the legal expert, what they're mostly responsible for is reviewing, the structures, your entity structure, the entity structure of the deal. Okay, they're going to advise on asset protection. And then if there's any documentation that's coming along with the deal, say contracts, private placement memorandums, they're going to review those. Now, here's the thing, investing through the wrong legal structure can actually cost you dearly. Okay, it can cost you in lawsuits, maybe in disputes. That's mostly on the active side of things. If you're investing passively, you have a tier one safeguard by investing in the entity of that passive deal. Okay, now there are so many ways that we can actually dig up here on how people saved money by going with a legal expert. But one of the biggest things is wire fraud. Okay, that's where your legal expert can really help you by catching a bad clause in a PPM before you actually wire the funds. Right now, when to add the legal expert? I say anytime you're investing with a new operator, we want to make sure that our legal experts weighing in, giving us guidance on how that particular operator likes to structure their PPMs. You may want to bring in the legal expert every time you invest, okay? But more importantly, we want to make sure we bring them in if we're going to, ahead of time, if we're going to invest through an entity. Say you're going to set up a LLC or a trust. We want to make sure that we've conferred with our legal expert, set up those right structures before we invest in the deal. It's not to say that title can't be moved around afterwards. Okay, it just is a little painful and expensive, but it's best to do that ahead of time. Now, the last, person in this phase to add, the last team member is that retirement account expert. Okay, this is the custodian that's going to help us set up a solo self-directed IRA, maybe a solo 401k. They're going to keep us investing compliant. And remember, they're not advising us. Okay, they're just there to make sure that we're compliant with the various rules, and they can help us avoid UBIT, UDFI, and UBIT taxation by, again, ahead of time helping us understand which type of entity structure we're investing in. Now, the reason why we want to make sure that we have a solid retirement account expert on our side, especially if we're going to invest our retirement funds, is that if done improperly, if we choose to, I don't know, interpret the rules ourselves and do it however we want, we might actually blow apart our retirement account. And those IRS penalties that you might pay can wipe out years of returns. So we want to make sure we have a qualified account expert, retirement account expert advising us if you're going to utilize your retirement funds to invest. Okay, so it's as simple as networking with current investors. Who did they use as far as a retirement account expert? That's probably my top way of finding this individual to advise us, because investors aren't going to stick around with companies that aren't serving them. Okay, so and just even like a quick phone call with them can be very fruitful in understanding what type of account structure you need to open, how do you need to fund it, and how can you deploy capital through it. All right, so then we takes us to phase 3, the advanced optimization strategies. Okay, the person that we want to add here is then the life insurance or risk management pro. Now, I'm going to speak to this in terms of like cash flow life insurance. We've talked about that here a few times on the masterclass. We've talked about infinite banking, but this person is going to be able to write a policy for us to where we can actually build up the cash value in the policy in order to create legacy growth, tax-free growth, and capital access. All right, we essentially are building our own bank so we can remove the money through loans, not out of the cash of the policy, but through a loan with the life insurance company to go invest. This allows us to unlock what we call arbitrage. So we are borrowing from the life insurance company at a lower rate than of a return that we can get from our investments or investing through an operator. Now, it also has this estate planning advantages. So that's why we call it Risk Management Pro. Okay, so it's not just about buying the cheapest life insurance policy and shoving cash in there. We want to make sure we're partnering with an expert that can help us balance the legacy and estate side planning as well. Now, when do we want to add this expert? Okay, I know so many investors that are, again, so focused on the tactics. How do we optimize for taxes? How do we optimize for that 1, maybe 2% advantage of return, which over time is impactful. But my suggestion for investors is let's get the other 2 teams built out, bring in this life insurance expert as the 3rd tier, the advanced optimization tier. Okay, so make sure that we've got, that financial strategy in place, tax strategy. We've found our operators. We've got good legal assistance there. If you're utilizing retirement accounts, you've got your great custodian. Then layer on your life insurance pro. So today, what we talked about is your path from moving from the lone wolf to the confident investor. Okay, you don't need all 5 experts on day 1. You just need the right ones in place for the current phase of investing you're in. So make sure you're starting off with that foundational expert for the current size of your portfolio that you need. Adding teams as you hit specific investment growth milestones. Here's a key tip. Make sure that your experts can work together. I love getting my tax and legal team on the phone once a year, maybe once every year and a half to make sure that we're 100% dialed in and coordinated. Okay, maybe more often if your portfolio is more complex. Okay, but meet with each of these team members minimally annually to make sure there's nothing that you need to do in order to seal up the financial leaks in your portfolio. Now, if you're ready to talk in further depth about how we can help you scale your portfolio, reach out to me here at passiveinvestingwithwhitney.com. Now, if you're here live, don't go anywhere. We're about to start the Ask Me Anything part of our show. All right. So my question to you always is, what did you love? What would you love to see? Jump over into that Q&A box, that chat box. I want to know. I do these shows for you. I want to make sure we're getting your questions answered. Second to that, if you have any questions, please jump over to the Q&A box, chat box. This is your opportunity to pick my brain for the next few minutes. Let's get those questions going. All right. Well, I'll hang out here for another minute or two. If nobody has any questions, I really do appreciate you taking your time, not only to spend it with me here today, but of course, as always, to invest in yourself. Going once, going twice. Any questions? Somebody said, I'm a lone wolf. Thanks for pointing this out, pointing us to help. Yes. Well, and I was there too, right? And it wasn't so much a lone wolf because I wanted to be a lone wolf. I think for me, it was two things. One, I didn't know what I didn't know. Two, I'd always grown up as like, do your own work, right? DIY. My life, I'd always been rewarded for get the work done on your own. Don't look on anybody else's paper, right? For the answer. And so asking for help was a little hard. Uh, but investing in real estate investing in particular is a relationship game. So it's all about how can we go further faster together. And part of that is not just with like operators that you invest in, but who's the team. Okay. I can't tell you how many times a $300 and $400 conversation with my lawyer has saved me like $10,000. I mean, I don't bet, but that's a slot machine I'll pay every single time. Every year I meet with my accountant, she saves me at least five figures. Those are great strategies to have. Some of them do take time to build. Do I have a recommendation for legal and other team members? So I did pause the recording on this, so I'll go ahead and share who I use from a legal standpoint. I still use KKOS. I've been with them for several years. I've kind of shopped around a couple times, but for me, I prefer to pay, don't do the subscription model of the legal and taxation. For me, I like engaging in what I need, but I do commit to a cadence where I'm meeting with each of those professionals at least once a year, and I do it in the same month. So I generally will do it in late October, early November to make sure there's nothing I need to move before the end of the year, and also I get prepared for the next year and what I think is going to happen. So that's me. That's what I do. Now, as far as taxes, we've interviewed. My person isn't taking on any more people right now. She's actually said, please don't share my name. But I will share. We've interviewed Amanda Hahn with Keystone CPA. We've interviewed Brandon Hall with Hall CPA. Those are kind of the first two tax strategists that I would start off with. There may be even somebody local. I think the question is, do they do real estate? I would always ask them, what real estate have they done? I interviewed somebody here locally because I'm all the time trying to figure out, expand my network. And he said that 10% of his clientele held real estate. For me, that was, while I liked everything else about him, for me, that was kind of like a no-go. I want somebody who maybe their clientele is more like 50, 60% real estate. So, but anyways, that gives you some names to start off with. We've also interviewed Tom Wheelwright with Wealthability. And there's other things like Provision, Cooper Anderson, those I think we're getting more into the subscription models there, which I think if you have a very sizable portfolio, may be advantageous, or if you have a very complex portfolio. Um, Solo 401k real estate investing. What are the common mistakes to avoid? Okay. The big solo 401k, I think and this goes with most self-directed IRA. Solo 401k, the nuance there is that you need to partner with your custodian. They need to know how much you're actually bringing in. One, are you eligible for a solo 401k? If you are, you're going to have to probably declare the amount of income that's coming in. Your CPA will tell you how much you can actually put into the solo 401k based on the amount of income that's coming in. Okay. I think a lot of people maybe open up a side hustle and then just shove as much cash as they possibly can. At some point in time, if you do get audited, there's a threshold between is your business actually qualify for a solo 401k? And then how much is your business earning? How much can you put in there? Um, do you have employees? At some point in time, if you start hiring employees, your solo 401k goes away. I've seen people kind of blow it apart that way. There's conversions that you can do, certainly. But you also want to take into account how are you scaling your company. Now, when we get to SDI, self-directed IRA investing, on top of that, we can't just, I mean, while we can do a lot, we can't consume any of the investments. So I've seen people buy gold and hold it at home. That's a no-no. I know some um, SDRA providers, there's like one or two out there that I know that really perpetuate that notion. I think it's risky. You can't do collectibles. You can't invest in like wine or art or anything like that, stamps. Um, you can't loan money, to any, you can't have any sort of benefit, nor can your direct family member. So think up and down your family tree, parents, brother, sister, and then your kids, can't have any direct investment there, or benefit from it. So don't go buy a short-term rental and somebody said mahalo, hi Barbara. Yeah, don't go buy a short-term rental in Hawaii thinking that you can use it. That can, in theory, blow apart your self-directed IRA. Um, and then just not keeping good bank records on your solo 401k, not filing the proper, annual paperwork, keeping good banking records, all that can really, pierce the solo 401k or the self-directed IRA. There are some videos on our YouTube page. We have interviewed several different self-directed IRA providers. My personal provider is Advanta. I brought Scott Marr on, I think, last time in April. So go check him out. Do you put CPA and lawyer and insurance person together and have a group Zoom? The CPA and lawyer, you can most time I usually can only get them on a call, like a phone call together. But yeah, there are some offices like Cooper Anderson that actually KQOS used to do this. They used to have their tax strategist and their legal in the same office, and so they could coordinate there. I think a lot of these places have started kind of breaking things up because that's a hard model to sell. But if you can get them all together, fantastic. The insurance person, possibly. I don't know why they would need to be on the call, but if you saw value in there, maybe you could get them on a call or on a Zoom together. But definitely the CPA and the lawyer, because here's what I've run into. I talk to my CPA and they're saying, here's all the way to, lower your taxation. And they might give me, you know, a incorporation structure. Okay, their ideal incorporation structure. But then you talk to your lawyer, and your lawyer's like, no, that is not how we're going to protect assets. Okay, don't do that incorporation structure. Do it a different way. So we want to make sure that they're talking, those two are talking to each other that way, at least initially, to where you get set up well. Especially if you're going to start building out a trust and a holding company, and then you're investing LLCs, maybe a passive investing LLC and an active investing LLC. It's worth it to kind of get them all coordinated. I know it seems costly. It might cost you that hour, it might cost you $1,000. But if it gets it knocked out of the park first, or what you could do is meet with each of them individually, get the plan, and if there's any discord between the two, get them together on a 15-minute call to work it all out. Awesome. What other questions do you guys have? Aw, somebody said thanks. You're the best. Happy to help here, guys. All right. Well, thank you again for your time here today. We will see you next week. Take care, everybody.